On Business Incorporated today. Algeria becomes one of Africa's first country to pay jobless citizens as oil income soars. Mozambique to receive new IMF funding after a 6-year hiatus. Plus, one month into the war in Ukraine, Kenya counts losses in food commodity prices. Hello and welcome to the program. I'm Will Ibong. We kick off as always with market numbers from major equities in Africa, where sentiments were mostly positive at intraday. The NGX index was marginally up at intraday by 0.01%, while South Africa's JSE jumped 1%. Elsewhere, investors in Egypt are back in the green. The EGX 30 traded up 1%, while Kenya ended Monday's session negative. Markets we track in the Middle East also traded mostly positive at intraday. In the UAE, Dubai's main index edged up over 1%. Also, the Abu Dhabi index was over 0.5%. Elsewhere in the region, the Qatari and Saudi Arabia markets both traded in different territories. Saudi index was up 0.25%, while the Qatari index traded down 0.53%. Over to Europe now. European airplane leasing firms have just cancelled all of their contracts with Russian airlines to comply with EU sanctions over the invasion of Ukraine. But the firms say they have little hope of ever getting their billions of dollars worth of planes back, leading to what some call it the biggest theft in history. Let's get details now from Rob Watts in Berlin. Hello, Rob.
As part of the European Union's sanctions against Russia over the Ukraine invasion, the EU announced that it would be banning European firms from providing aircraft to Russia's airlines through leasing agreements. It was part of a whole range of measures targeting Russian aviation, including banning the airlines from EU airspace. Now, the deadline for the leasing companies to cancel their contracts with the Russian carriers has just passed, and those cancellations, it would appear, have gone through. Now, the problem for these leasing companies, the vast majority of which are in Ireland, is that they now have to try to recover those Boeing and Airbus jets. And so far, they say they've had only limited success in doing that. Now, at the start of the week, they'd managed to recover fewer than 100 of the over 500 foreign-leased planes that were being operated by Russian airlines. And those planes have a huge combined value of over $10 billion. And it's for that reason that some aviation experts are calling this the biggest theft in history. The Russian government, for its part, has promised to compensate the leasing companies, but so far there don't appear to have been any negotiations because any financial agreement could itself fall foul of EU sanctions.
Hey, Rob, so will these Russian airlines be able to continue using these aircraft after the cancellation?
Well, that is a key question, and for the time being, the answer is yes. The Russian government is changing the law to allow these planes to be registered in Russia as well as the country they originated in, and these planes will probably continue to be used on domestic routes. Sanctions mean they can't fly out of Russia, but you've got to remember that Russia has a huge domestic aviation market because it is such a vast country. But the problems come down the line because the Western companies that would normally maintain these aircraft, the likes of, their manufacturers, Airbus and Boeing, for example, so that they will no longer provide parts and repairs for them. That means that these planes will essentially become unusable eventually. They also won't have a service history, which is essential for having permission to fly. So while these planes may stay in the skies in the short term above Russia, it's not likely in the long haul.
Now, peace talks are due to begin between Russia and Ukraine. What impact is this having on the markets currently?
Well, already on Monday, we saw optimism about a possible diplomatic solution to the war boost markets. European stocks rose at the start of the week, albeit marginally. The gains were somewhat tampered by the falling price of oil resulting from the new lockdown in Shanghai. European energy stocks lost a lot of ground on Monday as a result of that. But among the biggest risers were European brewers Carlsberg from Denmark and Heineken of the Netherlands after they announced they were pulling out of Russia. Carlsberg stocks were up 3.5%. On Tuesday, Asian markets rose on that growing optimism over the talks between Russia and Ukraine taking place in Turkey. There have been hints that from both sides even, that compromises, could be made. Ukraine's President Zelensky seems willing to put the future of Donbass, which is being occupied by the Russians, on the table. He's also indicated that Ukraine would accept not joining NATO for the time being. And as for the Russians, well, a senior general appeared to suggest that the first phase of the invasion was over and Russian forces are now focused on just controlling Donbass. And these things together appear to make a diplomatic resolution at least marginally more likely, and optimism to that effect is boosting markets once again on Tuesday.
We'll see how this market, continue to watch the market and see. So thank you, Rob. It's good to always have you on the program. Now move over to Asia, where stocks across Asia Pacific rose following a tumble in oil prices overnight. Bitcoin, meanwhile, surged past the key level, and the yen's sharp decline sparked some alarm in the market. Now, Hong Kong's Hang Seng Index jumped 0.91% in the last hour of trade as casino and tech stocks rose. Mainland China shed earlier gains, with the Shanghai Composite inching down 0.33%, while the Shenzhen component slid 0.46%. Japan's Nikkei 225 closed 1.1% higher, while the Topix rose 0.93%. Australia's S&P ASX 200 jumped 0.7% as bank stocks rose, while South Korea's Kospi was up 0.42% to close. We move over to the U.S. to find out how Wall Street is doing, where stocks futures were in positive territory early on Tuesday, ahead of consumer confidence data and a big week for economic data. Futures on the Dow Jones Industrial Average rose 0.42%. S&P 500 futures were up 0.38%, while NASDAQ 100 futures rose 0.31%. During Monday's regular trading session, the Dow Jones Industrial Average rose 0.27%. The S&P 500 climbed to 0.7%, while the NASDAQ Composite gained 1.31%. The gains came amid a tech-heavy market rally during regular trading, which led by shares of Tesla, which rose 8% on the news that it will ask its shareholders to split its stocks to pay dividends to investors. Now, Kenyans are feeling the pinch of rising commodity prices. One of the biggest drivers has been disruptions in global production and trade stemming from the COVID-19 pandemic, and the Russian invasion of Ukraine is expected to add further pressure to food prices. These disruptions have increased the cost of imports to Kenya, which is a net importer of commodities such as wheat and rice. I have Dan Kaburu, a business reporter at K24 TV in Kenya, to talk to us about this. Hello, Dan. It's good to have you.
Thank you. It's good to have you. Thank you so much.
So, Dan, can you tell us how Kenyans are reacting to these rising prices? Are they having to change tack in order to make ends meet?
Definitely, to put, Kenyans have to change the tact when it comes to now meeting the cost of living. As we speak, the prices of flour has gone to the roof. The rice is continuing very high, and many of them are feeling the pinch. Remember that these are the main staple food for many Kenyans, especially those in towns who are not able to access other types of food. Currently, even some of them are relying on the people in the villages to send them food so they can be able to beat the high cost of food and living. On top of now having the prices of like wheat flour and rice going up, also is the price of cooking oil. It is on the roof. And also, again, we have a challenge when it comes to also the issue of fuel. It's again on the roof. And basically speaking, a normal Kenyan is feeling the pinch of what is happening, not just in Ukraine, but also locally. The pain can be felt far and wide.
So you say now that soaring prices are changing the way people eat. Well, that's something to, chew on. Now, what is the government doing to tame surging prices, saying that prices of these essential food commodities, as you've mentioned, maize meal, cooking fat, and white bread, went up last month despite easing inflation?
Okay, so far we've not seen any much intervention from the government. The only thing we have to remember is will be going for an election in the next 3 months or 4 months from now. And what politicians are just saying out there is they're promising to lower the food prices once they get to office. But the question that Kenyans are asking them, if you cannot do it today or now, then what are you trying to tell us that you're going to lower the food prices once you assume power? But basically speaking, at this point in time, we've not seen any tangible intervention by the government when it comes to lowering of food prices in the country. And Kenyans are still hopeful that maybe something is going to be done. Today, being a newsroom, we expect there's a story we are following up on how there's some discussion on some MPs calling on the government or members of parliament calling on the government to lower food prices. Maybe expect maybe something from that, the legislators doing something. But as of now, since the prices went up, no much intervention from the government.
So there's nothing in sights for hope for the people. Is there nothing? What of private, maybe public-private partnerships? Is there anything in the offing, to help ease this bite that the people are feeling right now?
To be very honest, some of them, they're into business. Private partnership is not even in any discussion anywhere concerning that. There's no discussion on that line. So as it is, people have just been left to survive. And if you have no way of surviving, maybe some of them would be forced to go back to the villages or some other places, because in town it's very difficult. But of course, even in the villages, the cost of living is too high because they also depend on these commodities from the cities or towns to the ones they use in the villages. So as it is, no any intervention from any quarter, from anyone, but Kenyans are still waiting and hopeful that things will change.
Then we'll remain hopeful. Hopefully things will get better in the future. Now, thank you, Dan Kaburu, business reporter, K24 TV in Kenya. Thank you so much for joining us on the program.
Thank you.
Now we move on to oil prices, where prices have dropped in early trade today, extending losses from previous day as Ukraine and Russia headed for peace talks, and on fears of a drop in fuel demand in China after the financial hub of Shanghai shut down to curb a surge in COVID-19 cases. Brent crude futures were trading down 1.1% at $111.30, having dipped as low as $109.97. U.S. West Texas Intermediate crude futures hit a low of $103.46 in an early trade and were down 1% at $104.87. Both benchmark contracts lost around 7% on Monday. Ukraine and Russia were set to meet in Istanbul on Tuesday for their first peace talks in over 2 weeks. Sanctions imposed on Russia after it invaded Ukraine have curtailed oil supply and sent prices to 14-year highs earlier this month. Now, Algeria has become one of the first countries in Africa to start a permanent unemployment benefits program for its young population, as surging energy prices give the OPEC member more firepower to tackle social unrest. According to the National Employment Agency, about 580,000 job seekers in a population of 44 million between 19 and 40 years of age are eligible to collect monthly payments of 13,000 dinars. That's about $91 from the state. It marks one of the clearest bids yet by authorities to address simmering economic discontent that has fueled 3 years of sporadic protest against Algeria's ruling elite. Soaring oil and gas prices spurred by the Russian invasion of Ukraine are temporarily giving more fiscal leeway for the former French colony. Hit hard by 2014's oil price crash, Algeria had been finding it increasingly difficult to fund its budget, with declining international reserve projected by the International Monetary Fund to reach critical levels in 2026. And now we'll take a quick break. We'll get more updates from the commodities market when we return. Do stay with us. Welcome back. In a time when work is becoming virtual and a lot more people are working from home, brought about by the COVID-19 pandemic, about 52% of global employees now work remotely once a week, and this has led to a spike in demand for mobile devices. Meanwhile, the prices of telephones, handsets in Nigeria have risen sharply in the last 2 years. Prices of high-end phones, devices now sell for about 902,000 naira, while lower-end phones have remained relatively flat across board. I have joining me to discuss this Olufunto Ajeni Fuja, analyst at financial derivatives company. Hello, Funto. Thank you for joining us in the program.
Thank you for having me.
Now, so Funto, apart from the demand, what else is driving the surge in the price of phones, devices?
Okay, so to respond, I'm going to talk a little bit about demand. So as we know, phones have become indispensable. Things that used to be luxury items before are now necessary to go through life. And now phones are becoming more tech savvy. You know, there are more innovative features there. So those are the main things that are driving the prices, because I doubt you would have paid 900 and something thousand for a phone in 2017. But now you have phones that are waterproof, that have better battery life. You know, there's a difference between, you know, things that the urban subscriber wants and the rural subscriber. So we're seeing in urban areas that they are more sophisticated to understand that it makes more economic sense to pay a premium price for a phone. So that's why we're seeing that despite how high these prices are going, people are still wanting to buy them, you know, especially the wealthy people. You know, of course, you want a phone that you are able to flip and put in your pocket and, you know, it drops and it doesn't smash. So, you know, even though there are certain things causing other things that are causing a rise in prices, such as, you know, a shortage of certain smartphone components, you know, 5G enabled networks. When these 5G phones gain popularity, the demand is going to increase and people are going to have to pay for that technology. So prices are going to increase, but we're seeing that the demand remains inelastic because phones are indispensable. Like, people do everything with their phones.
You talked about the urban population. What about the rural areas? What's the level of penetration in that area?
It's high because, like I said, everyone uses phones. They might not, in the rural areas, they might not use the most latest high-end premium value phone, but they still use phones. And you know, we're seeing telemasts being put up in the rural areas. You know, even Nigeria, so in January, the broadband penetration increased to 41.6%, and this is quite significant in comparison to the 20-odd% that was recorded in 2017, that people are using these phones. They might not use these high-tech phones because, you know, they need to make calls, you know, with payments. They might not be able to use mobile banking apps on those phones, but they can take advantage of the USSD platform on low-end, low-value phones. It doesn't have to be a smartphone before you can make payments. Like, I'll give an analogy, and this is also applicable to those in the rural area. If you were to leave the house with, like, if you were to forget your phone or you were to forget your card, you're most likely to go back home if you forgot your phone, because you can't do anything without the phone. You can only use your card for one thing, where you can use your phone for so many things. You know, in the rural areas, you know, Nigeria has a national broadband plan, and they aim to get the broadband penetration to 70% by 2025, and it focuses on both the urban areas and the rural areas. You know, download speeds, 4G coverage, because only 37% of the population have access to 4G coverage in Nigeria. So the government is pushing that. That's why I said you see, like, telemasts being put up in rural areas, and yeah, you know, there's a focus on financial inclusion, and you need phones for that.
So if we do need phones, and you say people in rural areas don't need to have high-end phones or sophisticated phones, what if I decide that I want to leave if I have 5G network come on board right now, and I want to move to, say, or somewhere remote, and I want to work from there and just maybe commute to work, maybe by train or something. So you're saying that I would not get maybe the best if I don't have money maybe to splurge on maybe a very sophisticated phone. So I wouldn't be able to join the working team or the trend. Would I be able to jump on that? Especially, I'm talking with inflation, which is really high. How are people able to afford these phones that can help them work from remote areas and still be part of, you know, work, society, and the rest of it?
Okay, so I think this is kind of where fintech companies come in as well. You know, they are creating technologies that are able to accommodate lower end phones. You don't need to have, you know, I don't want to mention brands, but you don't need to have like this 900 and 2,000 full. You don't need to have that before you'll be able to do that. So I feel as long as you have a smartphone, even if it's the mid-range price of, there are smartphones that go for 40,000, 60,000, that you're still able to video chat, you're still able to surf, to search on the internet and things like that. So they would be able to. And like I said, there's more work being done. So there's more rural patronage going on. There's the rural penetration is expected to rise with some of the new technology that's coming in.
Okay, talking of technology now, with the war in Ukraine, we're seeing disruptions in supply, we're seeing global chip shortages. And what is the outlook for prices globally in general? What do you think is going to happen?
Okay, so the main thing that the war is doing is causing a price hike in, certain metals and certain minerals that go into the production of these phones. And obviously that will increase the cost of production, and you would expect that that would reflect in the price. But I think what some of these manufacturers might do is they might just ease on production a little bit so that they don't have to charge super high prices to the consumer. Also, like I said, because of the trends we're seeing with the demand and prices, people want these exciting new, these exciting new features. And I feel like if these companies are able to deliver that, especially the wealthy, they would be willing to pay if the prices go up. But I feel like the manufacturers might try and just ease on production, just so that, to keep the price kind of stabilized. But if you're buying a phone that has, the most expensive Gorilla Glass on the screen, you're going to have to pay for that. You're going to have to pay for that feature. Like I said, people are becoming sophisticated to understand that there are certain premium features in a device that they have to pay for. Like, for example, you see a lot of kids using tablets and stuff like that. And, a family might have 3 kids and they all have their tablets. That's obviously a huge expense, but it's better value for money because you keep your kids entertained. They're all, learning. They can do so much from that device. So I feel like even if prices go up, the demand remained inelastic, and not just for phones, for laptops, for tablets, for
any mobile device.
Any mobile device
that can help work.
Yes.
So essentially, what you're saying is we can't do without these mobile devices because they've come to be a part of our everyday lives, and definitely we hope we'll continue to be able to fund it.
Yes.
That's the most important thing. So thank you so much for sharing your thoughts with us, Funto Olufunto Ajeni Fuja. Thank you so much for joining us on the program today.
Thank you for having me.
And now Mozambique is on the verge of a new funded program with the International Monetary Fund, IMF, 6 years after the lender halted its previous deal following a debt scandal. In a statement, the Washington-based lender says the country reached a staff-level agreement with the IMF for a 3-year extended credit facility program that will see the Southern African country access roughly $470 million in loans. The deal is a landmark for the IMF and Mozambique after relations soured in 2016, when the government owned up to about $1.2 billion of government-guaranteed loans that it had failed to disclose to the fund under the terms of the agreement. According to the IMF, the program will address transparency in debt management and the natural resource sector. The Reserve Bank of Zimbabwe, RBZ, has released $100 million to clear the backlog of foreign currency allocations at the RBZ's weekly auctions. According to the governor of the central bank, Mr. John Mangundia, the bank introduced weekly foreign currency auctions in 2020 to enhance foreign currency access by importers, but some of the successful bids could not be funded due to shortage of forex. Meanwhile, shortages in the market have seen a number of businesses, including leading supermarket chains, pegging prices using black market exchange rates to entice customers to use hard currency for payments. The central bank governor says the bank is working to expunge the backlog to achieve stability in the forex exchange market. And that's the program for today. Thanks for watching. I'm Willie Bung. Bye for now.